President Trump unveiled new tariffs on April 2nd in what the administration is calling Liberation Day as the US Mexico Canada trade agreement expires. Trump is enacting reciprocal tariffs on major trading partners with particular focus on countries that heavily contribute to the $1.2 trillion US trade deficit. And here with us to give an update on the latest news is Barron senior economics reporter Megan Leonhardt. So, Megan, we've already seen Trump levy a 25% tariff on imported steel and aluminum, 25% on goods from Mexico and Canada, and another 25% on imported autos and automobile parts. So, what other tariff actions rolled out on April 2nd?
April 2nd was certainly a day. It's funny. I feel like one analyst actually called it Obliteration Day instead of Liberation Day. It remains to be seen exactly how all of this is going to play out. But this was actually a much bigger tariff announcement than I think most of us were anticipating. It was interesting because Trump did sit there and roll out his universal 10% tariffs that were discussed on the campaign trail. It was something that I think a lot of us were sort of expecting at some point. But then, in addition to that, there were these reciprocal tariffs, as Trump called them. And those really did range and were quite large in some cases. I think some of the highest, neared 50%. And Trump did sort of say that, these were kinder than originally anticipated. And so, it is up to negotiations now, I think, in terms of what we're actually going to see. But these are going to potentially go into effect pretty quickly. The 10% universal tariff is set for April 5th. And then, of course, the individualized country to country tariffs could go into effect as early as April 9th.
So, what's the goal or end game here for the administration?
The administration has several goals that it's sort of, said that this is going to take place. And I think one of the bigger ones is revenue generation. So obviously, when you do put on these levies, they do end up generating revenue. It was interesting because the April 2nd announcement could generate up to 400 billion in revenue, or about 1.3 of GDP percent of GDP. And so that is something where, there is some substantial dollars at play here. I'm not sure that it's quite enough at this point to get done all of the plans that the Trump administration would like to enact, but it certainly helps. I think the other big issue that Trump has mentioned and his administration has mentioned is the idea that they want to level the playing field, particularly for US manufacturers and the manufacturing sector.
And as you mentioned, one of the goals here is to level the playing field. But how are other countries responding or may respond with potential retaliatory tariffs?
Well, it's been interesting because the Trump administration has, really put forward a number of tariff proposals, and, certainly some of which have already been enacted, and countries have already started responding. Certainly when the steel and aluminum tariffs came through, you did see threats from the EU and others, Canada, that were going to, be retaliatory. We haven't seen quite as much because, it's still early days for these latest tariff proposals, but it is interesting because I feel like there's been several countries, including Brazil, India, and even the EU, that have all signaled the desire to start bilateral discussions over this.
And to your point about this now being a negotiation, any news there? Or, obviously this could take a while to play out. So, what's the focus there?
I think the focus will be how much countries can negotiate this down. It does seem like the Trump administration did signal that they were willing to work with countries, and so far on the sort of individualized levels, it remains to be seen if, we really will see any movement. It was interesting because, with this April 2nd announcement, we did not see any additional levies against Canada and Mexico. And we know those countries have been negotiating with the Trump administration. So that could be an early and perhaps optimistic sign that there could be some wiggle room here.
Yeah, and one big thing on consumers' minds right now are prices going to go up, and how do you see this impacting the cost of goods and services?
I think the April 2nd announcement is really going to increase prices. In fact, I almost think that it is practically, a standard bearer at this point for the inflation that we're going to experience. I think the big question on everyone's mind is whether it is going to be a situation where it's a one-time price level increase, much like an oil shock, or if it's going to be something that is more of a continual inflationary pressure. And of course, that would be particularly detrimental right now, given that the US is still above the Federal Reserve's 2% inflation target. In the past, when we've had these inflationary tariffs take place, we were in low inflation environments. And so this is a very big change, and it is something to be watching very carefully. Unfortunately, there are many sectors that could be particularly hit by the April 2nd announcement, retail being a big one here. And of course, we all know that consumers are very fatigued by price increases. And so whether or not the consumer is going to be able to navigate this remains to be seen.
And we talked about prices, but how might this impact the job market?
The job market is going to be an interesting one. We're going to be seeing the latest employment data, coming out in a few days, and that could be a good indicator of where the market stands prior to some of these larger tariff announcements. So far, the labor market has been pretty solid as we head into, this year. That could, of course, shift because we do have a number of, manufacturers, number of companies and employers that have already said that they need to take action in order to, really respond to these tariffs. And that action may be really pulling back on their investments, on their budgets, on their planning. And of course, that could limit their investments in people and hiring. But it remains to be seen. We have, sort of looked at, the wide swath, and it is interesting because I think a number of economists have said that while they do think that these latest tariffs will, particularly send us down the stagflation road where we do see higher prices and slower economic growth, the specter of a recession still remains to be seen. It certainly has increased the recession risk, but I don't know that we're, already, in a recession, or certainly, if it's kind of baked into the pie at this point.
So, then what are some good watch items for investors to look at as the story unfolds?
I think investors should really be looking at sector by sector at this point. Obviously, there are a number of tariffs that the Trump administration has previously announced that do really focus on specific sectors. If you look at those steel and aluminum tariffs, for example, it is interesting because the number of products that are really at risk range the gambit, everything from sports equipment to beer cans, for example. So it is one of those situations where these might end up falling on certain sectors more than the other. As I mentioned, retail, for example, is going to be an area to watch very closely. Many of the individualized tariffs that the Trump administration announced on April 2nd were targeted at Asian countries where, apparel is produced very, very widely. I also want to point out that the Trump administration has used, a number of different authorities to actually invoke these tariffs. And it will be interesting to see if there's any court challenges or certainly, injunctions that could really delay some of this.
Well, Megan, thank you so much for your insights today. We really appreciate it.
Thank you.